What's up everybody, welcome to the Stocks channel. My name is Corey and today in the stock market we see a huge bounce off the June lows, which begs the question, is it possible that we get a bear market bottom with a W shape? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 1.97% and we see SPY got a very strong bounce off of those June lows today, and we did close back over the 5 EMA. So we are definitely seeing a high volume push off the June lows, and we could more than likely catch a lot of people off guard with a strong push while everybody is preparing for capitulation. Remember, the stock market usually loves to hurt the majority, and there was just way too many hedging and preparing for the June lows to break down. So it does not surprise me to see us bouncing from these levels. And we do have to remember that we are still in a downtrend. So while we can start thinking about the possibility we put a giant W-shaped bottom, we do not know that this is a W-shaped bottom until we can break out of the downtrend and then snap the bear market. So we will only know that looking in the rear view mirror, so there's no reason to get obsessed about trying to catch a bottom. I know it's very sexy and everybody wants to talk about timing the bottom to the exact candle, but if you are a disciplined trader, you should not need to do that. You simply need to continue to manage your risk and continue to trade, and don't worry whether or not the market is bottoming or topping. So with that being said, you are still managing your risk from long trades at the June lows, which is going to be this level right here at 365.86. And if you are trying to short the market, you are only doing so at critical resistance levels or on the breakdown below that level, knowing you need to cover if we break back over that level. So right now, bulls will be eyeing the gap to the upside at 373.48 because they will want to close that gap to scare away some of the bears that are using that level as resistance. And then we could see the S&P 500 starting to trend up towards the 13 EMA or the 20 simple moving average. Keep in mind, it's still a downtrend until it's not. So if we do go make a lower high, we are not ruling out the possibility that we go make another lower low and still hit 350 on SPY, which will slightly undercut the June lows. And then we could start to assess whether or not we're going lower from there. Remember, do not obsess about timing the bottom perfectly. If you are an investor and you're willing to buy at 350, you should be willing to scale in a little bit at these levels, knowing that you'll only buy more if we go down to 350. And that way, if the market does W-shaped bottom and we for some reason rally out of the hole and we never look back, you're not just sitting there holding 100% cash and never started to nibble at all. So be prepared for either of these scenarios because they are both possible and nobody knows for sure which one is the most likely. So just know you are managing a risk around the June lows, and there is a possibility we get a W-shaped double bottom off of the June lows, or that we get a bounce and then we undercut the June lows and hit our downside price targets. Now, I also want to point your attention to a new level I added on the chart, which is this level right around SPY 358. And that is the weekly 200 simple moving average, which does a very good job telling you whether or not it's a bear market within a secular bull market, or if we break below that level, we will have to start talking about the possibility of a secular bear market. That means the bear market could go on for over a year, which is very painful, but as long as we are above SPY 358, it is still possible this is just a bear market within a secular bull market, and we could be very close to seeing a W-shaped bottom off of that level. So if we do start to bounce from the June lows or this level right around 358, we will want to be aware that that is a very critical support level, and if we break above resistance at 373, we want to be looking for resistance in the 380s around that 20 simple moving average. The critical risk level remains 390 and is still a risk-off market and a downtrend while SPY is below 390. So make sure you're not trading long positions for too long unless you're investing and willing to hold for over 12 months. On the NASDAQ 100 triple Qs, we're up 1.99%. And again, the triple Qs are bouncing off of that June low around 271. And we did see some high volume buying back up to resistance at 280. The same exact thing applies I just went over with SPY, that there's the possibility we get a W bottom. And we're going to know whether or not we can hold this level at 271 or 267.5. And if we get the lower high, lower low, we'll be looking for 258. Above 280, we're looking for the gap fill in resistance at 284 and the critical risk level at 293. And you need to continue to expect a downtrend while the triple Qs are below 293. On the Dow Jones, we were up 1.86%, and the Dow Jones is trying to hold this support zone around the price target at 293, and we are back over the 5 EMA, but we have a huge elephant in the room because we have that weekly gap down there at 285, and we know that weekly gaps typically get filled. So there is a very good chance at some point we are going to see the Dow Jones going to close that gap. If we continue to bounce, we're looking for the gap fill to the upside at 300 with resistance just below 299. and then we have resistance at 305.8 and the critical risk level at 312. And remember, these are downtrends until they're not, so continue to expect lower highs and lower lows until we break the downtrend. On the Russell 2000 IWM ETF, we were up 3.16%, and IWM had a perfect bounce off of the June low right there around 163, and we did close the gap to the upside just below 171. If we continue higher than the gap close, we're looking for resistance around 174.7 and the critical risk level at 178. But do not rule out the possibility these are lower highs before we hit that next price target to the downside at 159.5. On the ARKK ETF, we are up 4.66%, and we continue to see ARKK getting that strong bounce off the support trend line at 37, and we're back up to resistance at 40. There's nothing to celebrate just yet because, like I said, these are downtrends, so this could still be a lower high right around 40 to about 41 to 43, and we could still get rejected and go hit that new price target to the downside at 33.7. Respect the downtrends and manage your risk very well around these resistance and support levels. And remember, ARKK is still in a very powerful bear market, and we are still way below the 200 moving average. On the VIX, we were down 7.36% as we see the VIX getting crushed from about 35 all the way back down to 30. But there is nothing to celebrate for the bulls because the VIX is still very elevated, still making higher lows and higher highs in a very strong bull trend. Now, if the VIX starts crushing all the way down below 30 and getting back below 24, then the bulls can hang their hat that the VIX may be crushing and we could see fear leaving the market, which is going to help develop a bull trend. For the time being, remain cautious and very disciplined during this high volatility phase. And as I always tell you, volatility does work in both directions like you just found out today. On Bitcoin, we're currently up 3.13%, and Bitcoin continues to hold in there like a champion, refusing to close below this critical risk level at 19,000, but we are still below the resistance trend line right around 21 to 22,000. The bulls need to get Bitcoin over 22,000 as soon as possible, or they run the risk of losing support and coming down for the next leg lower at 17,000. As you can tell, we are seeing high volume buying, and that is why this level will not break down. So you can continue to accumulate Bitcoin at these levels. Just be prepared to buy at lower prices if we do lose support. On Amazon, we're up 3.15% as we're starting to bounce off that support around 115 with the upside resistance that's going to be the gap fill right around 125.7 and the 50 daily moving average of resistance. If we break 115 to the downside, look for the next leg lower at 106. On Microsoft stock, we're up 1.97%, and Microsoft is testing resistance yet again at 242. And if it gets rejected from this level, we're looking for a retest of the low at 236 or a brand new lower low at 231. If we break resistance at 242, look for resistance at 249 and 252. On Nvidia, we are up 2.6%, and Nvidia continues to bounce off of this support right around 122, and this continues to look like a falling wedge, which means we could get a bull breakout all the way back up to fill the gap at 142. Look for strong resistance right around 135, and the loss of support at 122 means you instantly need to get more risk off for more downside. On Tesla, we were up 1.72%, and Tesla did hold that critical support and risk level at 283, so you can continue to stay bullish above that level or use the 50 daily moving average just below 286. If we break 283, we have strong support at 270, but if we lose 270, this is going to look like a confirmed double top breakdown, which means we'll more than likely go fill the gap below 251. Look for upside resistance around 291, 296, 304, and 309. On Apple stock, we were down 1.27%, and Apple had an extremely high volume day because there was an initial gap down in the morning, and at some point we were way below the lower Bollinger Band and below that support at 147. But as you can tell, buyers stepped in and we closed all the way back up here around resistance at 150. Below 150, it increases the chance we could revisit 147, and if we break 147, we could be coming back down to about 142. Above 150, we have strong resistance at 154 and the 50 daily moving average at 156. On the financials, we were up 1.97% as the financials had a strong bounce today, but it was mostly just a dead cat bounce in the short term, even though we do have a gap to fill to the upside that we do want to pay attention to. The industrials were up 2.2%, back near that resistance around 85, and we have gaps to fill to the upside and the downside, and we are still in a strong downtrend. The healthcare sector was up 2.19%, back up towards that resistance around 125, and we still do have a downtrend while we are below that resistance. The energy sector was up 4.43% after closing the gap to the downside. We're finding instant support, and this dead cat is starting to bounce towards the gap close to the upside, so you can stay bullish above 69 for the gap close at 76. So jumping back over to the S&P 500, continue to manage your risk around the June lows and make sure you know exactly what you're going to do above and below that level, and we are currently still above that level, seeing a high volume bounce. Remember, the majority are usually wrong, and the majority are still expecting a break of the June lows and full-blown capitulation. Therefore, it is very unlikely going to occur exactly like everybody is trying to plan for. Have a very solid risk management strategy, because the only way you can stay profitable in this market is managing your risk very tightly and being a very disciplined trader. Also, don't forget, I still have 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to claim 50% off your first month of bank. This offer is expiring this week, so if you still want to claim the discount, now is your chance to do so. And Bank sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. If you're looking to join Bank or the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.